Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Busy day. We, of course, have continued chaos in the, we call it this short squeeze area of the markets overnight. A lot of earnings on our radar. If anyone cares, there's a Fed meeting today, but I doubt anyone cares about that, really. We have two guests coming on today. First up, Fari Hamzi from Hamzi Analytics would join us at 8:15, and then Bill Studebaker, the CIO of Robo Global, playing in the same sandbox as Kathy Wood. He would join us at 8:35. So a lot to get to here. Hit that like button, hit subscribe, hit share. I'll bring Joel on now. Joel, how are we doing in the pre-market or overnight trading session?
Fantastic, Spencer. Looking forward to today's show. Welcome, everyone. S&P futures are trading in the red by 49.25 handles at 37.9375. Crude is in the red by 15 cents at 52.46. Gold in the red as well. That's down $14.10 at 18.4060. Bitcoin, that's down $1,040, just trying to hang above that $30,000 level. And I skipped silver. Silver's down about 50 cents here at 25.04. So Triple D, your head on a swivel here. What are you seeing in the after hours and pre-market trading?
Right now, I'm tweeting out just for our followers here, and my tweet is going to say, I'll give you the pre-tweet. It's going to say, before it's actually tweeted, the transfer of wealth from hedge funds to retail. Talking it live right now. There it is. I just tweeted it. So you can listen to us live. You're obviously already listening to us live here. If you're
so we'll probably get another 7,000 people because you got, what? How many followers you got now? Like 8,000?
I don't know even. I got to look. 12,600.
Whoa! You took out that resistance at 8,000.
I got rid of that at 8 and 10. Yeah, 12,600. But
I'm going 15,000 bid.
Are you going 15,000 bid?
Yes.
On GameStop?
No, on you, on your Twitter followers.
Can we just talk what is going on? So we have a broken pricing mechanism on a lot of stocks right now. GameStop's not worth $234, but it is right now. Where this party ends, we have no idea. People are like texting me last night. I'm buying puts on GameStop. It's got to go down. I want to, you know what's coming back in. Man, this thing was $340 earlier in the pre-market. It's 100 points off the highs, but you know what? I would say that's safe. I don't even know if anything is safe. When the pricing mechanism completely breaks down, it's completely disconnected from fundamentals. We've talked about this. Price can go anywhere. This is just trading off of, and it's inefficient right now for the simple reason is that you don't have shorts controlling it. You don't have shorts like saying, okay, well, this is stupid. It's going to come back in. One, the borrow's insane. But two, who's got the guts to short this thing after they just watched what happened to Melvin Capital and Citron? I don't have the guts to short it. Not at all. I had multiple texts. Are you shorting GameStop? I'm like, are you nuts? I'm not touching GameStop. This is just, pure gambling here at this point in time. I can't touch that. I'm not shorting that. You're shorting that, you're getting it handed to you. I mean, apparently, Melvin Capital and Citron, both having the shorts on for fundamental reasons, blew them out. They blew out of the positions. Apparently, they both covered the positions here. Melvin Capital said they covered yesterday, and Citron said they covered as well. Whether that's true or not, we don't know, obviously, but that's what's going around is that they have covered. The stocks actually, GameStop started selling off after that news broke that Melvin Capital and Citron had covered. Selling off from the 340 high it was making in the pre-market. But the pricing mechanism is broken here. I mean, it's broken on AMC as well. It's just incredible to see, though. And what's really awesome to see for once is that the little guy won. If Melvin Capital and Citron really did cover at probably enormous losses, that money went straight into Robinhood accounts. That money went straight into, a lot of retail accounts. The little guy won. The little guy never wins. The little guy won, and they're still winning on AMC. I mean, I don't know where this is going. There's a lot of people, don't kid yourself, getting rich. Like, people who are just taking flyers. I'll buy some out of the money options here, on AMC at $6 or $7. It's worth 16 this morning. I have never seen anything like this in my 25-year career. I've seen short squeezes like Tilray. We've seen stuff, but I haven't seen companies that, are basically teetering on bankruptcy, exploding in price because we're simply squeezing shorts. This is just incredible to watch. How it ends, I don't know if anybody knows how it ends. I think it ends in tears for everyone, but who knows? I mean, at this point in time, it might not. I mean, there's some people who are getting out of their GameStop, getting out of their AMC, and making millions of dollars. There's people making millions of dollars on this. I mean, I was looking at that Reddit at the, what's it called again? I forget. WallStreetBets. There's people who are saying they've made over $1 million in this. Small accounts, like I was looking, like their initial investment was like 20,000. So, bought options, and they're worth millions.
I think
I don't know if that's believable or not.
It's important to remember that that is how the WallStreetBets community started. Like 8 years ago now. Like it started for the express purposes of posting screenshots of massive losses and massive gains, usually massive losses. It was a joke. That's the whole point. The point of the community was the community was a joke, and then it's gotten bigger and bigger and bigger, especially over the last year, since with everyone stuck at home and getting stimulus checks and what have you. But you're right, Dennis. A lot of people are posting screenshots of massive gains. One guy posted a screenshot of a massive, like a several $100,000 loss, and then the next day it was like $500,000 gain because of GameStop, right? Crazy stuff out there. A couple of things I'll add to what you just said. Andrew F said he sold most of his short, so he's still a little bit short. He said, and also
he's still a little bit. He's
still a little bit short, and we don't really know. As the chat is pointing out, as you pointed out before we came on, we don't really know. We have to kind of take their word for it. That Melvin Capital told Andrew Ross Sorkin that they closed their short, and then Andrew Left covered his short. Right? We're never gonna really know that. We just kind of have to either believe it or not.
Could they just be saying it just to try to stop the pain trade?
Right.
It's possible. That's possible. We don't know. So, I would say take that with a grain of salt because it's hard to say that's, 100% accurate.
Okay. All right. You know what? My dad just texted me. Okay.
What did he say?
Okay. He said, Good Morning America has a segment about day trading.
But day trading on the map.
Good Morning America. Okay, we've hit the main. The Good Morning America indicator is on today. He just texted me that Good Morning America is doing a segment on this in 5 minutes. That's how you know we've hit critical mass. When it's on the Dennis, you don't know, but that's like a big morning show in the U.S. It's on. It's like the morning show for moms everywhere, right?
I know what Good Morning America is.
Okay, I'm just.
I've heard of Good Morning America.
Okay, so yeah,
they have that in Canada.
The end is near, I think.
It says it's Good Morning Canada. It's called. Just kidding, but I mean, yeah, the end is probably near on some of this stuff, but is it? I mean, we are seeing. I did not think AMC, as thick as that stock is, could go up 240% here today, or I would have bought it yesterday. I mean, you saw a little bit of a squeeze going on the last couple of days, 350 to 5. You're like, it's going to thicken up at 5. Hell no. 1676. I mean, this is absolutely incredible. I don't know what to say. I've got a whole list of stocks with short interest. You can just run the scanners yourself. I've bought a few of these things just, for flyers, just to play around with. AMC I'm not in. I don't know where it ends. I mean, and people are like, but I'm telling you, there are some people, whether it's believable or not, there's money being made and money being lost here, and that money is directly being traded and being exchanged from transferred from the hedge funds to retail. The hedge funds are losing here. And what does this mean for the overall market? Talking in a fascinating conversation with my buddy Chris there last night, who's a big trader, trades options, And he, points out a very, thing that I was thinking as well. But quick to point it out, he's like, why do you think we're seeing weakness in some of the Momo names? Like, why did PayPal have a bad day yesterday? Why does Square have a bad day yesterday? Why is Square getting hammered here again this morning? Because you have a lot of hedge funds that are short, low growth garbage companies and long, high growth, companies. Those hedge funds that are getting blown out on these positions have got to sell other stocks to probably meet margin calls. It's not just Melvin Capital and Citron. Don't kid yourself. There's a lot of people short a lot of these things, a lot of these high interest stocks, because it's not just a couple stocks, not just AMC. There's 20 or 30 or 40 of these things with higher short interest that are really squeezing. I mean, Bed Bath & Beyond is ripping too. So the money's got to come from somewhere. So if you're not getting, and obviously, we know Melvin got some money from Citron and from the other company as well. I forget, 0.72. It's got to come from somewhere.
So if you've got Citadel 0.72.
Yeah, that's where Melvin got some money. But there's other hedge funds here. It's not just Melvin short. There's a lot of them. So they've got to raise the money from somewhere. So they're probably getting some, it could potentially be getting some margin calls here and probably got to raise some capital. What do? They got to sell these other names. So you're actually seeing weakness in some of these Momo names because of the strength in stocks like GameStop and AMC.
Relationships, Dennis.
That's relationships. Yep. Yeah.
This is a new one.
This is the type of action that can start a crash. It really is. Because once, you see this, just crazy mispricings everywhere on these stocks. I mean, everything just completely pricing mechanisms breaking down. It could go the other way too on some stocks. So, right now, I think regulators are seriously, and I wouldn't be surprised exchanges are seriously looking at some of these stocks. I would not be surprised if we see some halts. I would not be surprised if we see GameStop halted today. Halted not for volatility, because obviously you get the halts continuously for volatility, but halted by the exchange for more information. I mean, if it continues to rise like it does, like it has been, they're going to have to reevaluate because, there's going to be some people who get killed. I mean, somebody bought that 340 today. They're down 130 points. They're not worried because they think it's going to be 500 tomorrow. And in this market, who knows? It could be. But there's going to be some blood in the streets, and you're never going to hear about any of the blood. In the stories on Twitter, you won't hear about anybody who bought the stock at 340 and sold it at 212, or the GameStop. You will not hear those stories because people just brag about their winners and they don't talk about their losers. I like talking about my losers. It makes me feel better. But the majority of people don't talk about their losers.
And so, I was going to add something before. You said the pricing mechanism is broken. This is a good argument for anyone out there that doesn't believe that short sellers help keep the market in line and help keep price in line. This is what happens when one half of the market is broken, when the short half of the market is broken, right? Price can go insane. So people, for anyone out there that says, "Oh, shorting is un-American, it should be banned," this is what will happen, right? This is what will happen if you do that.
It is. So. And Spencer, I just want to take it one step further because there's going to be people who are going to counter you. Well, why don't we want stocks when people are getting rich and stocks going to 1,000? Because they end like Tilray. Yeah. It'll go to 300 and somebody's buying it up there because you couldn't short that stock. That's why I did it. Sometimes you get these things, you just can't get the borrows. And then they go up and eventually they end in a bloody mess. And, did GameStop just end in a bloody mess today? It possibly did. 340 to 202 is a bloody mess. But I thought it ended yesterday when it went from 150, or 2 days ago, when it went from 157 down to 60. And then, it showed me that, wow, this can go on a lot longer than you think it can. So I see shorting is the most American thing. But it really is. It keeps price in check. And when you break that function, we're like for me, for instance, I'm scared of short stocks right now. I think with a short interest, I'm not touching it. So don't think like for a minute there's all kinds of shorts in here that are coming in. They're all spooked. So all you have right now is natural buyers and natural sellers and very few shorts coming into GameStop, new shorts. You have very few people coming in because they are spooked. So that's why the price is moving around 10 points, a minute here. And, obviously it's volatile, and even with shorts, it can do that. And we know market makers back off when there's extreme volatility like this. But, shorts provide the liquidity. And when something gets overdone, they're like, that's stupid. I'll short that. And I do it too. I see a big pop, somebody talks about someone on CNBC, pops 10%. I'm gonna go, that's stupid. I'll short that. And I bring the price back in line. Well, right now, I'm not even doing that on other stocks. I'm too spooked. I'm spooked. I'm talking to my other traders at Bright Trading too. They're all spooked too. Other traders saying the same thing. I'll shorten, coming in anything that's, under a $10 stock. I'll short Apple because it's not going to happen because Apple has so many players, so thick. You're not going to see the pricing mechanism, I hope not, break down in Apple, although we did see it during the flash crash. But, on stocks like this, the pricing mechanism is completely broken right now. Broken.
Mm-hmm. Yeah. So
that's my rant.
Fari Humpty is going to join us in, I guess, a minute or two. We're waiting for him. Should we go to earnings in the meantime? Because I don't want to spend the whole show on this.
Do you care about earnings? Do earnings even matter anymore?
I think they matter. I think people still care. But
I mean, Microsoft. Let's talk the Microsoft report. Let's give the numbers on Microsoft.
It was a blowout. They blew it away. That's all you need to know. They crushed the numbers. EPS beat, sales beat, every segment beat expectations. Every segment. The cloud, personal commuting, commercial bookings. Every segment beat the estimates for revenue last quarter. Crushed it.
Dennis, do you have the expected move on this one? I don't have that platform open.
I don't either, but I could go get it.
No,
I'm sure. I don't know. Like if it was where to get up to last night, Joel?
Almost 248.
How about
247.70?
How about 5%, Joel?
Okay, so 5, and it closed at let's see.
Yeah, expected move was $11.
Okay.
Around $11.
All right.
So there you go. I mean, it's right in there. 240. Where to get to 248? So it overshot a little bit, but then came back in. And the straddle raiders win again. So they are winning on some stocks. They're not winning on GameStop, but they're winning on.
Is anybody writing straddles on that? I mean,
I think they probably did. I don't think they're doing it anymore because they're probably out of money.
I mean, that first 15 minutes, I mean, they just jammed this thing. And you were thinking, where should I sell? Where should I sell? And when I look at these kind of situations, I just think about if I was an institution and I had a couple million shares of this, I would just be on the way up. I would, let's say I wanted to sell 1 million. I'd put, 10,000 at 40, 10,000 at 40 and a half, 20,000 at 41, 30,000 at 41 and a half. Just scale up your size with your increase in price because you're not going to get the top, right? So that's the only thing. So it turned. So I think you can, I don't want to say discount that pre-market action because, I know you won't take away. It's not going back up to that 248. It could, but I don't think it is. So I'm just going to look at.
I think people are taking profits on other stuff. I think there's still you're seeing it a little bit in the big caps too, in the mega caps. Not as pronounced as you see it in some of the smaller stocks because they're thicker. But I think the GameStop affects Microsoft as well.
I agree. That's why I said I don't think it. That's why I'm saying I don't think it goes anywhere near back to that pre-market high.
No, I think we have a sell-off in the overall market today because of GameStop. I really do believe that.
Unless the exchange is halted and then there's nothing to be done.
Well, I think that's going to be the solution here. I don't know if it can fix itself. I mean, how do you get shorts to come back in to reprice something? You have some retail with insane amount. Maybe it just fixes itself by crashing. But it's 125 points off the pre-market high. So maybe we were already seeing that. I mean, that's a crash in itself. It's down 35% from the highs that it set 2.5 hours ago. So it has, in essence, crashed, but it's just crashed yesterday and it got all back. So
wait, but my question, it doesn't if the exchange were to come in and halt GameStop, not for volatility, but and fix things, wouldn't that just create more volatility when they bring it out of the halt?
It depends. It depends on what's happening. I mean, when's the company going to do an offering too?
That's what we've all been waiting for.
Why, if you're management and you're not taking advantage of these insane prices, what are you doing? What's the management doing? They're dropping the ball. I'd do a huge equity offering, even if you got to do it 50 points below the market price. I mean, you're just taking in so much cash, it could get you out of all your trouble. I mean, that's what Wedbush said. Why not do an equity offer and pay off all your debt?
I mean, look what we saw yesterday.
Get yourself out of trouble.
Look what we saw with Plug Power. They've been running. They gave guidance yesterday morning, and then what did they do yesterday afternoon? They announced a $1.5 billion offering.
Another one. They just did one like 3 weeks earlier than that. I mean, they've been doing offerings like crazy because they're growing the company. But GameStop, this could be like their lifeline. This is their lifeline as a fundamental company here. You know, some people believe this is all turning around because of an activist. And, you know, those people just don't understand the market mechanics here. This is all just short squeeze. But, you know, if you're that company, you got to do an offering here. You got to come in and take advantage of these inefficient prices and sell some stock. And maybe that puts it down. I don't know. Maybe it just fixes itself. Like, you know, everybody, it just eventually crashes. But again, even trying to bet on that, though, like, you know, we saw John Nigerian tweeting out that he had a bunch of puts on GameStop yesterday. That was when it was 120. I mean, it's 220 now. Those puts are like worth half as much as probably what they were. So, you know, and John Nigerian's an excellent trader. So, you know, the logic says buy puts on this, you're going to make money. But logic is being defied right now massively. You got to take the logic hat out on this and just think about the market mechanics behind it, the structure behind it. And sure, there's no liquidity being provided by shorts, no new liquidity coming in. I can see there's no offers out there. It's just natural sellers. There's a lot of natural sellers. Don't kid yourself. People who got those calls, well, you know, can sell the stock because they're probably not going to get the liquidity, you know, in the options market. They're going to get in the equity market. It's probably really illiquid in the options market. It's going to be wider because the market maker in the options got to go really wide because the thing's moving around too much. So, you know, if I was long calls, and if you're lucky enough, anybody's listening that's long GameStop calls, I guess, you know, it's hard, though, because you can't get a board to short the stock against your calls. So the mechanics are broken there, too. Normally, I would just short the stock against my calls, but you probably can't get a borrow. So then you got to go to the option market and sell it outright. So I don't know what happens when the floodgates open, everybody tries to actually get the hell out of this. But maybe that's what we're seeing in the last couple hours. But this is just incredible. This is, you know, rewriting CFA textbooks on market efficiency. This is just, all of it is just incredible to watch.
Surf the line with a good point. You're saying, like, that's why stocks exist, right? You go public so that you can raise money in the public markets if and when you need it, right? That's one of the reasons for going public in the first place.
Yeah.
Is to raise money. Yeah. So why wouldn't they want to raise money? I don't know.
We're
not there. Yeah, it's raising time. I don't know.
For them, for AMC as well. I mean, if I'm AMC, I'm like getting my board together right now. We need to do an offering, not tomorrow, after the ballot. Like, let's get this going right now because this is silly town. Let's take advantage of these prices. I mean, we're up, you know, at 222%. The stock's getting back. We're getting GameStop all the love. But it just got back 2 years of losses in one day. 2 years of, you know, shorts been working this position to make money. It's all gone in one day. Is it going to go to 35, to 70? What's the all-time high on AMC? I mean, can it do that? It could do anything. It can do absolutely anything now. Pricing mechanism's now broken on this one too. So it can go anywhere. It is. It's completely
You're broken. You're broken.
I just want to talk one thing that and this is something that we've talked about long before any of this ever happened. When you are shorting a stock at $3, what is your maximum gain?
$3.
$3.
What's your maximum loss?
Everything.
Apparently a lot.
Infinity.
So, you know, I don't want everyone to think we're just coming in and we're talking about risk reward. This is something that's been pretty consistent. I mean, even $5. Yeah. I mean, anything can happen. And this is just a great example of it. And everyone needs to employ. And then the other thing too, and I know, Dennis, you mentioned some of the mechanics about the options and also the stock. Put an order out there because you're going to get done. I mean, these things are ripping all over the place. And if you pick an order, you know, if you have, you know, I'm just throwing something. If you want out at 250 right now and it's at 216.46, put the order out there. See what happens. If you don't get your 250, then, you know, then maybe you got to go 240. But unless you have your orders out there, I'm just telling you, that's trading like water, and you can get done. Now,
you can get done on stuff. I mean, you could have thrown that out there pre-market, went to bed last night, and got executed up at 3:30 this morning. Sold 3:30.
Yep.
on a stock that, is teetering on surviving, which is just unfathomable. This is just efficient market hypothesis just blew it all to pieces here. It officially doesn't exist. We already knew it didn't exist. I wouldn't be making money all the time if the efficient market hypothesis did exist, but we know officially it is dead, buried, gone. Whoever wrote that is stupid. They were wrong. The efficient market hypothesis is stupid. What that is, it says that stocks are always correctly priced.
Well, it's a hypothesis.
It's a hypothesis that has absolutely been proven to be false, and that is proven to be false today. I'll just give you
an example
efficient
here.
Market hypothesis today.
Someone tweeted at me last night that they're selling their GME at 300, and I looked at it, and I'm like, and then I got up this morning and I saw where it was. I think it was. I don't know where it was. I got up pretty early, but before I worked out, and I'm like, man, I hope that dude. I don't know. Could have been a female. I hope they put their order out there.
Yeah.
I hope they did. Yeah. Because they might have felt pretty bad. But anyways, where's Fari?
I don't know. I shot him an email and I texted. I don't know what's going on with Fari today.
Fari, we've been trying to get you on forever. He was texting me, I want to get back on the show. It's like, okay, we got you on. And then he's too tied up in all these. I want to know the Sigma channels on GameStop.
Oh, man.
I want to know how many Sigma event this thing was. Because it's got to be, when it goes to 3, it's pretty significant. I want to know how many Sigma events.
Oh, he's probably having to get new monitors.
It's like 50.
Yeah,
the Sigma channels are off the charts.
Channels. AMD had earnings too.
Do we care? Go.
Hold on 1 second. I was emailing with our guest, our other guest. All right, AMD beat EPS 52 cents versus 47 cents. Beat on the sales 3.2 versus $3 billion. Gave Q1 guidance above estimate sales guidance. That is so beat good guidance. Same story.
All meaningless. Fundamentals are meaningless on everything right now. It's just whatever the hell they want to do. And you cannot the fundamentals have been meaningless here for months. The fundamentals are so meaningless on everything right now. You're sitting there and you're trying to analyze a balance sheet, you're trying to analyze an income statement, and you're trying to analyze the cash flow of the last quarter. You are wasting your time. It will not predict the movement of the stock whatsoever. So, the algos look at the headline numbers, but even on the headline numbers, they look good and then they're bad. So stocks, random walk right now to a certain extent. Do I think AMC is still going higher to $100? I've said it for a long time. It's got dang close. It never did. Yeah, I do. Am I spooked on this overall market right now? Yes, I am, because the mechanism is broken on certain stocks. I don't know if it's going to break on other stocks. So
are you as spooked as
cautious?
Are you as spooked as you were last January?
Oh no! Well, that was for a reason. That made sense. That was logic. I was like, "This virus is coming," and obviously we're 2 months early on it, but that was logic. This isn't logic. This is all just nonsense. So
pretty sure that was like a year ago, like this week. When
we were getting all spooked. But I am, I'm not jumping in right away. I think if you want a stock and you get a good price here today, and you're going to see some stocks trade some crazy prices, you take advantage of it and you jump in. I did buy one stock yesterday for my retirement account. It's Lockheed Martin. It's been getting beat up and beat up and beat up. This company makes money. If you believe in space, you think Lockheed Martin isn't going to be a big part of the future of space?
Yep.
They might be the biggest part of the future of space, but they don't care because it doesn't have a story right now. So they're hammering that. So am I thinking I'm going to make a lot of money on Lockheed Martin this week? No. This is a day trade? No. Is this a swing trade? No. I stuck this in my long-term investment account because it's got a 3.1% dividend. It's reasonably priced, and I believe that they will be a big part of space in the next 10 to 20 years. So it's been stuck. I've wanted it forever. I was like, it's low enough now.
Who do you think has the most technology for space? Who do you think's been working on it for a long time?
Lockheed Martin.
Exactly.
Got to be one of the main ones. I mean, they were space. Now you have a lot of other companies, and Maxar, smaller companies that got the story behind them. But the forgotten child. If I'm Kathy Wood, and I'm putting together a space ETF, are you not putting Lockheed Martin in there? Are you not? If you're putting together a space ETF, are you not adding LMT in there? I think you are. So maybe she does a space ETF, and she adds some Lockheed Martin. Maybe like, whoa, hey, I didn't think of Lockheed Martin. I think there's a story here still for the space, but I think there's a value here. So, I'm in my long-term retirement account, I'm investing in Qs, SPYs, Apple, Amazon.
Yep.
I'm investing in big core companies that are real, that, are firing on most cylinders. Lockheed Martin, the quarter wasn't great, but you know what? The company is still great. And that's why I bought that stock. This is not a trade. It's thrown in the retirement account, not to be looked at.
It gave back more at half of those gains from it hasn't got back to its February levels. This is one that tried, couldn't, not sexy enough. It came back. It's on a monthly support level. It could sit here though. Here's the thing with a stock like this. It could sit here for 2 months, 3 months.
The chart looks
6 months,
terrible.
8 months. Yeah. Yep.
The chart looks absolutely terrible. It
My
looks
buddy
terrible.
Jeff would love this chart.
If you're trading, you're not buying a swing trade. You're not buying a day trade. This chart looks terrible. But you know what? I'm buying a company here. This is what it's really all about. Is in my long-term retirement account is like, I don't give a crap what the chart looks like. Is the stock price reasonable? And is there potential for growth? I don't think space is going away. I think Lockheed Martin's going to be a big part of it. I think when I look at this LMT purchase, I think when I look at LMT 20 years from now, I think it's significantly higher than where it is today. So that's my thoughts. This chart is terrible. It's probably going to continue to go down. But some of my best investments, ones started like this. And, you just forget about them. You're buying when there's blood in the streets, and eventually they turn around. My Merck investment that I bought, or Lilly was a great one. I bought my Eli Lilly at $30. It was at 70. It went down to 35. And people are saying, why are you buying Eli Lilly? That's horrible looking. Well, one, it had a 6% dividend. And two, I was like, it's one of the biggest pharmaceutical companies in the world. And I don't think an aging population is going to not need pharmaceuticals going forward. So I put a significant portion, 3 times a normal size position in Eli Lilly when the stock was $30. I sold it way too soon. I started selling at 90, thinking I tripled my money. It was pretty good. And now it's 212.
I might be partially responsible for you.
But this is investing. Completely different animal. You might be. I felt like it got overdone. Well, everything gets way overdone in this market, so it is what it is. I wish I still had my Lilly. It was a mistake to sell it, but the biggest mistakes I've made is selling stocks.
Yeah, don't do that. All right, 8:33. We're gonna have our guest William Studebaker on in a couple of minutes. Hit that like button. Hit subscribe on YouTube. Hit share. I had a thought I wanted to say, and it just left my mind. Oh yeah, so. I'm seeing, I'm watching the SPOOs this morning. We're down. We're a little over 1%. I'm wondering what will happen if Dennis, what you were saying earlier about the short squeezes really impacting the rest of the market. That really hasn't happened yet. Today seems like it's
happened.
Today.
It happened yesterday.
Starting to happen.
Did it happen yesterday? Maybe a little bit, but it's really happening more today. So I'm wondering what's going to happen when everyone else starts to realize that's what's happening, because it really hasn't. I mean, it's starting. It's just starting, but it really. And I don't think
it's not going to happen in Apple. And I said it could happen a little. You won't see the effects will be muted on the Apples and Microsoft and Amazon. They're too big. But some of these smaller growth names, I mean, it's probably an interesting, just to go and look at what Melvin Capital is holding. I mean, you can go look at their holdings and just to go analyze. Again, apparently they've already blown out, so they've already did it. But it's just an interesting exercise to go look. What were their longs?
Go look in the Benzinga Pro. You can look it up right there. Here we go.
Bring it up. So, can you show it to us? Show us what Melvin had. I mean, it's an interesting exercise. I mean, if they've already blown out, so they don't have to do this now. But there may be other funds that have to do similar things to what Melvin just did. Or maybe it's over. Maybe GameStop's going to just crash from here. If GameStop crashed from here, that trade's over. But GameStop starts going to 500. I think you start seeing the Momo Tech roll over because of it, which is insane.
What Dennis is talking about is that, when you get margin calls, you have to, there's stuff that you have to come up with the equity. And that's what, that's one thing you talk about margin. It's great when it's going with you, but when it turns, they'll blow the clearing firms could blow you out of the positions. That's probably one thing with Robinhood. They probably don't have to do that too much because people have such small positions, and it gets near zero, boom, you're out.
So Melvin's got five. This is from the last 13F. They got Fiserv, Alibaba, L Brands, Expedia, Amazon. Pinterest, Visa.
Do you have the shorts and the longs in there? Like, where's the shorts? Because they're hedge fund.
I don't know if I can see their shorts and their longs. This is just copied straight from their 13F, I believe. So,
okay.
But again, to your point, all these hedge funds own a lot of stocks, and they're going to have to sell other stocks in their portfolio to cover.
There's the mechanics make other interesting things happen. Yeah. And that's what you just have to be aware is I believe you saw a sell-off in Momo Tech yesterday because of the roll and the rotation. People are like, oh, they're selling money to move it into these GameStops and to move it into BlackBerry. Like it's incredible to just watch, what this money does. And it's incredible to watch how much influence it has on price. So we're in a broken market in certain stocks. It will fix itself. But right now, a lot of these stocks, the pricing mechanism is broken.
This is fun, but let's move on and let's bring on our guest here, William Studebaker, the president and CIO of Robo Global. William, good morning.
Good morning, guys. Good to be here.
You're watching all this craziness too, right? Surely you must be. Uh-oh.
We're losing them.
William, do we have you?
Yep, I'm here. Can you hear me?
Okay, we hear you. Do you hear us?
Yes, I do.
Okay, great. What is your reaction to all this craziness out there?
Talking to GameStops and all this, crazy price movement in small, high shorted stocks.
Well, there's definitely a tremendous amount of liquidity in the market. It's interesting to kind of observe it. Looking back a couple of years ago, it was fear. Now we're going into the greed stage. I think you have to be a little bit careful as we migrate into kind of these uncharted territories. But clearly, the animal spirits are alive right now.
The animal spirits. I like
that. I like that.
That's good. Yeah. So William, we brought you on here because we've been watching the outperformance of certain areas of tech, right? Tracking what people like Kathy Wood are doing, and you're in her sandbox too because you've got a number of funds and indexes that are in this same space: robotics and automation, AI, healthcare tech. Your funds all had fantastic years last year, outperforming the S&P. So like, what's happening right now in your area of the market? What are you watching in 2021?
Well, I think looking back to what happened in 2020, many areas in the economy were devastated by the pandemic, but there were several areas that really accelerated, and clearly robotics, AI, and healthcare innovation took center stage. And as we talked about these technologies, looking back, 5, 6, 7 years ago, many have sort of observed these as being niche technologies, and we had talked about these being foundational technologies that are being applied to all industries, all markets. And fast forward 7, 8 years later, and that's clearly what's happening now. And importantly, I think what investors are beginning to look at is that the typical 60-40 stock bond portfolio doesn't exist anymore. And the way people invest has to change. And investing in disruptive innovation has been very hard for a lot of investors historically because it hasn't sort of ticked certain style boxes. And a lot of analysts, I think, do a very poor job of sort of analyzing the disruptions that's happening and the upside to the companies not over a 1 quarter period of time, but a 2, 3, 4, 5 year period of time. And I think you kind of put all this together, and I think that's what you're seeing right now is that there's massive disruption. And the changes that we're seeing are no longer linear, they're exponential, and they're being driven by robotics and AI.
So, like, give us some companies that are on your radar here.
Well, there's a lot of companies because we obviously are supporting 3 indices.
Right.
As we talk about some of the trends that are emerging in 2021 and beyond, we see a lot of them, but a couple of them are factory automation is going to boom in 2021. And China is definitely leading. And the installed base of robots is anticipated to be in excess of 3.2 million by the end of 2021. That's 2 times the 2015 level. And that's a small fraction of the global installed base of employment, which is about 360 million. So you've got companies like Rockwell Automation that are providing the technology to support digitization and factory automation. So that's a company that we think is super well positioned. You look at logistics and warehouse automation, is going to soar as the pandemic has totally transformed the supply chain, and it's all about just-in-time fulfillment. So companies like Zebra Technologies are on the front lines here. Okay, if you've ordered anything from Amazon, their mobile technology, their computing technology, their RFID scanners are tracking goods and data, and they're now using this to track the COVID vaccinations.
That's ZBRA, right?
ZBRA.
Yeah.
Right. And they're now tracking the vaccinations, because it's really important to know what the temperature is and if there's any spoilage. And they have labels on their package that basically, when there is a change in temperature, whatnot, the label changes. So that's another company that is continuing to prosper, and I think this is going to go on for years. You look at autonomous systems. I mean, they're emerging. COVID's accelerated the deployment of autonomous systems, ride hailing, last mile, delivery, robots that are doing disinfecting, things like that. Everyone knows about, companies like NVIDIA that are enabling this, but there's other companies like, I'm trying to think, that are supporting this. You've got, sorry, I'm just trying to think of a couple names that you may not be familiar with. Maybe Ambarella, that does video processing, and they have a video processing chip that's now moving into computer vision, and they're taking center stage as they're rolling out driver assistance technology into companies to kind of focus on.
Bill, a lot of these companies that get a lot of press in robotics aren't public, right? Like Boston Robotics has that cheetah, or Boston Dynamics, right? It has that cheetah that does really cool stuff. And someone in the chat mentioning Sophia the robot, which I don't believe the company that makes that is public also. A lot of these really cool stuff is private still. Any comments on that, and the amount of innovation in private companies versus the public side of the market?
Yeah, I mean, the innovation on the private side is rampant and disruptive. And part of the reason for that is that you have the convergence of ROS, robot operating systems, and open architecture. So if you were to open up or start up a robotics company 5, 10, 15 years ago, the chances of it working were probably pretty remote, because typically what would happen is that you would run out of money and the investment in essence would sort of collapse. There was no sort of scaling. There's no shit. You're not starting from ground one. You're basically starting, from a mile up, and you have all this shared information. So it's actually relatively easy to start up a robotic or autonomous system or a technology platform company. So I think you're seeing development. And so as I sort of was talking about the disruptions that we're seeing 2-3 years ago, people were talking about no growth, low growth. And in my mind, I didn't understand what they were talking about, because obviously fortunate to live in the Bay Area, where I see disruptions and innovation and technology going on every day. And there is so much growth that's happening, not just in the US, but globally. And throw on the fact now, looking out the next 3 to 5 years, we're going to add another 4 to 5 billion people that are going to have access to smart devices. So you're talking about 4 to 5 billion people that are creative, intelligent, that have access to information that, oh, by the way, are consumers. So we really have a very different paradigm shift now than probably any time that we've ever seen in history.
Joel, I think you wanted to jump in.
Okay. Oh, I wasn't sure if we lost it for a second. We're on the line with Bill Studebaker. He's the CIO of Robo Global. First appeared on our show, yes, Benzinga's PreMarket Prep show, in October of 2017, talking about these same concepts. And I don't even want to go and look at the chart and see where it was. That was around $30 then. But a couple questions for you, just from a mechanics perspective. as some of these companies grow faster than others, I mean, is you something that you have to like rebalance? Are you rebalancing on a daily basis, a weekly basis? And also from since when you started doing this, is it get harder and harder to find companies to put into your ETF?
Well, questions there. So we actually do rebalance. We rebalance on a quarterly basis to back to our original position sizes. So we're trying to get investors from point A to point B in as least turbulent airspace as possible, recognizing that there is going to be volatility. And in essence, we sort of have a modified equal weight portfolio, which has obviously performed pretty well. I mean, last year, if you look at Robo, was up 43 or 44%. And this year, up 10%. Our H-Tech strategy was up somewhere in the neighborhood of 67%, up about 10% this year. And our AI index was up, I believe, 67 or 68% as well, and up about 5% year to date. So we think that the strategy to perform is to have access to the whole global supply chain of technologies and applications, and that's what we try to do. In terms of trying, finding companies, is it harder? I would say not necessarily. I think the opportunity set relative to when we started 7-8 years ago is vastly different. So it's kind of fun to see the evolution of how a lot of these companies are using these technologies to enable their business. But importantly, a lot of these technologies are the sort of picks and shovels for a lot of companies that generate a pretty meaningful revenue mix. So our challenge to put companies on our index is to be able to identify them in one of our proprietary subsectors that we've created. I mean, we were the first, company ever to have created, in essence, a classification system, an S&P, NASDAQ, or whatever for robotics, AI, and healthcare innovation. So companies have to fit within our indices, and we're looking for companies that have a high revenue purity, and then we're spending a lot of time understanding the technology and the leadership and the moat around their business. So there's a lot of fundamental work that goes into this. It's not just some AI collaborated spreadsheet that puts together companies. We do a lot of bottoms up work as well.
2 questions, one easy one hard one. You can pass on the hard one if you want. Give us a company that is in your ETF, but you might not necessarily, associate with automation and robotics. And then second, and this is a tough macro question, no one has the answer to it. With, obviously with the pandemic and the changes, structural changes in our economy, unemployment going higher, do you think that the robotics industry, do you think there's going to be like a transformation instead of people working at fast food restaurants and, service industries, getting into robotics? Do you think it will be as capital intensive?
Okay, 2 good questions. So first question, I mean, there are just
very
so
good,
many companies, it's hard to isolate it. But take, for example, in our Robo Index, there's a company called Kuyang that does 3D sensing. So imagine your phone is going down an assembly line, your iPhone, and it's taking 3D images of your cell phone to see if the circuit board and everything is manufactured perfectly. The human eye obviously can't tell that. And so this is like a technology that's being rolled out to all parts of manufacturing. Kuyang is probably about a $2.5–3 billion market cap company based in South Korea.
What's the ticker on that? Is it in the US?
It's a foreign company. It's
Okay.
Kuyang. It's a South Korean company. So again, the important thing about investing in automation is so many of these companies are not based in the U.S. And if we just were only focused on the U.S., we would miss a large part of the value chain that exists in so many countries throughout the world. So it's really important that you have that diversification. Your question about the evolution of work, I think without question, the nature of work has changed. It's been changing, for hundreds of years. I mean, think back in the early 1900s. We had 60% of our workforce was in ag. Now we have 2%, and we're producing, more with less people. So the nature of work is changing, and it's going to continue to change. And the interesting thing, when you think about robotics, most people tend to associate robots stealing our jobs and killing us and so forth. The companies and the countries that have the highest utilization of robotics have, guess what, the lowest unemployment rates. So the correlation that you see with robotic systems employment is actually almost 1-to-1. It's completely different than what the public sort of envisions or what the politics want to, or the politicians want to think about. So, I think that robotic systems, autonomous systems are collaborating with us like they've never been done before. And they're giving us a range of opportunities that we did not have years ago. And while it's hard to predict what's going to happen in the future, I'm very optimistic that these are systems that are going to help us, live better than we've ever lived.
All right. William Studebaker is the president and CIO of Robo Global. Will, we appreciate the time today. Thanks a lot.
Thank you.
All right. 8:51. Fari Hamza said he overslept, by the way. So.
Oh, come on.
Can I short that?
So that's that. He just
Can
emailed
I
me.
short that?
He emailed me a few minutes ago. Said you.
At least he's honest. We like him
Well,
being honest. We like
this is what happened. Fari was trading all night,
Oh yeah, for sure.
and then he probably fell asleep, and then he forgot to get up.
I almost did that too. I was up a lot of hours last night watching these markets, and up early in the pre-market. I was up just after 4 o'clock watching this GameStop.
Why did you get up for the open? There you go again, showing up.
I know I should have been up at 3:30 getting prepared for the 4 a.m. open. I didn't know what to do with GameStop. I would have been trading GameStop.
Well,
I
you
wish
don't
I could
have
say,
it, Dennis.
oh yeah, I'd be selling it at 3:30 or 3:40, but holy. I mean, okay, so
anybody-
we've given
wait.
GameStop the love.
Yep.
We've given AMC the love.
Too
We
much.
give any love to KOSS.
Oh
KOSS.
my gosh.
This was $3 2 days ago. Another short squeeze. It's $20 this morning. It's up 100%. I mean, here's another. I
How
don't
many
even
halts?
remember. But this is a
how many halts
retailer, right?
yesterday?
KOSS a retailer, right?
I'm counting the halts. I think just they had one halt yesterday. That's it. One trading halt. Oh, that's less than I would have thought.
What exactly are these mall-based stores? What is KOSS?
It's like household items, I think.
Household items?
Yeah.
So I'm going back, and I'm going to go back at all data to try to figure out, where. And so basically, we are now. This is a stock that,
It's electronics.
All right. So, anyways, this was a stock that traded down to $2. Traded below that. Let's go down to the financial. Down to 80 cents in March. The stock made its high back in 2007 around 15. So you're getting back 13 years of losses here in 2 days. Again, these are all gifts. I don't know how big the gift is going to be. So I can't tell you, where the top is or anything like that. But I think when the dust settles, all of these stocks, do eventually end up coming back down. But to just go blindly short them at 20 and then it's at 50 or 100, I mean, you don't know. The path is unknown, completely unknown. It's crazy town right now. But this is a stock that's exploded from $3 to $20. It's up 1,000% in 2 days. This is incredible moves. I'll just say that. I have no idea where these things are going. I think long term they're going back down, but short term, who the hell knows? Nobody knows anything.
The same can be said for Express. The same can be said for any of them.
Well, Express isn't getting back 20 or 12 years of losses like KOSS is. It's not even getting back 1 year of losses. So, but I mean, it's trying pretty hard here this morning. It's up. So maybe give it till the afternoon, and maybe we'll get back 2 years of losses. Maybe by tomorrow you got back 5 years of losses. This is just insanity. I cannot imagine being a hedge fund and being short a whole pile, of stock and trying to figure out, okay, I'm short 1 million shares. I got to get this covered. What do I do? I mean, you're short 500 shares, like, oh, I'll lift the offer and I'm covered. I can get out. That's the nice thing about being small. You get out of this stuff very easily. In and out, in and out, in and out. We wiggle in, you wiggle out. Getting in and out of a couple million shares of this puppy right now probably ain't that easy.
Yeah, I'm just
Especially
trying to
a volatile puppy.
I'm just trying to put myself in the mindset of these hedge funds. So what I'm guessing is what happened is maybe in the fall, like they saw GameStop at like 15, they saw it was at 2 last March or last April, and they're like, oh, okay, GameStop is not worth $15. It's probably worth closer to $5, and they just put on a short, and they had no way of seeing this coming. But it goes back to Joel's point.
It's never happened.
But it goes back to
that.
Joel's point. Like if you're gonna short Express, right? Why are you shorting a $5 stock? What's the most you can make, right?
Don't short stocks under
right.
$5.
Right. So
Page 16 of our book, don't short stocks under $5. And we're going to give like a couple pages to this. When the pricing mechanism breaks down, what do you do?
Could you submit your
stay away.
outline? Can you submit an outline, because you keep adding chapters and I
I
haven't
know, I'm
seen
at
an
page 60.
outline.
Somebody's going to write the book out there. And
Roman
they're just going to deliver
numeral
it to us.
1. Remember how to do
They'll just
outlines?
deliver it to our home.
Roman numeral
This is your
1,
book.
and then what do you do? A? Is that the way you're supposed to do outlines? I want you to submit an outline by the end of the day.
Nobody
I don't
remembers.
know.
Okay, 8:55. We'll do some.
Bed Bath and Beyond.
Oh my gosh.
It's up. You know what? This one's muted. This one's only up $5. So again, $40 stock. You're seeing these $3, $4 stocks go. You want to know why the $3, $4 stocks go so much more? Because the people went out and bought the calls. So there's so much more. You know, if you were buying the 5, 6 calls and you're buying so much more size, now you have all that size coming to play in the market. So that's where you get these explosions in price. Is that people got massive exposure? That's why I'm saying there are some people getting rich. There are some people getting rich right now on some of this stuff. And I'm not saying we should be going and doing it. You know, maybe if some listeners, I'm sure we got a few that are doing really well in this kind of stuff. This is not my bread and butter. It's an awesome story to watch. I'm not going to teach you how to do this. You know, I'm not going to say, okay, this is the next one. Did I nibble in some? Have I made a little bit of money in some of these? Yeah, but I'm not getting rich off of this. I'm not going and buying 100,000 calls of AMC thinking it's going to $100 because I've been, I don't know. I'm not paying the cost. The premiums are all jacked now too.
Oh yeah.
Like GameStop, somebody's asking me, or what puts are you buying? I was looking. I was like, you know what they want for the 60 puts as of yesterday pricing? The 60 puts. The stock was a 147.
For what
now
day?
It's 27 would be cheaper.
For what
the
day?
60 puts going out, I think it was a month.
I don't know, a couple bucks.
$10?
No, 20. It was $20 or something
geez.
like that. So I mean, yeah, $2 I'd buy them. No, it's like, well, let's just go look for fun. Bring up the option train. The options premiums are so jacked. It's like, even if you're right, the odds of you coming in fast enough for you to make money on that much of a jacked premium are not that high. So yeah, so if we go all the way out, let's go out to March, you know, and say, okay, well, it's going to come back to reality by March.
How about the March 100?
I don't even have pricing on that right now.
Okay.
But let's just, yeah, so I know that's why messed everything else up is. But March 60s, which are way the hell out of the money. March, they went off the board $19. They're 18 bid off the board. So I mean, it's taking 33% of your gain right off the hop. Your max gain is taking 33% of it. So you got another 40 there if it goes to zero. But now it's 268. Is it going to get back there by March? Is it going to correct itself by March? I'm not so confident of that. If it's going to correct itself that soon, it hasn't stopped going up yet. So it's tough to be an option. If the people who are making the money were buying these options a week ago, you know, anticipating that, you know, maybe, and that's really smart, you know, anticipating that this could happen. People were saying it could happen with AMC. I didn't think it could. I was wrong. It did. $17. I didn't think it could go from 5 to 17. It did. There's people making some money in those options.
All right, 8:58, got about a minute and change left in today's show. Someone asked what Kathy Wood or what ARK Invest bought last night. They bought some Twitter yesterday. Yeah. That was notable. They bought 1.4 million shares of Twitter. So it popped on that. That was kind of the only one that I saw.
That was the main one.
Yeah.
I mean, there's, you know, some other ones there. PCAR, she bought some more of that. But she jumped into the dip in Rockwell Automation, which got the beats yesterday. You can see her tactics, or she's buying the quality companies on dips. She does. If you see the stock up 10 and she's been buying it, she's probably not buying it that day. The stock pulls back and she gets down and dirty and she buys some. I mean, she's buying dips. She's buying dips on the stock she wants, which is smart. Smart way of doing it. Twitter, well, actually, a little bit against yesterday because she was buying the rip. Maybe she was causing the rip. When she was buying, she bought 1.5 million shares. I would have put a little bit of upward pressure on it, but I don't know what the headline was that drove it from 48 to 52 yesterday. I was lost in GameStop land, so I'm missing headlines on the important things, I guess. But
you're lost in GameStop land and you're not trading it.
But I'm learning from it.
Okay, there you go.
I'm going to tell you one thing. Here's an important thing. Your education is worth a lot of money. A lot of money to save you money, one thing. To make you money, two things. Because these history tends to repeat itself. It doesn't repeat it, but it rhymes. Like, you know, like Ryan Dietrich comes on our show and
George Lucas said that. It rhymes.
And maybe it came from George Lucas. But in any regards, by watching the action in something like this, there's so much education. I don't get education as much in the markets anymore. I've been trading 21 years. It's not often an event I haven't seen before. I haven't seen this before. So I'm learning so much from it. So, okay, I didn't make any money trading GameStop. You know how much education I got? What is that worth? That's worth thousands and maybe hundreds of thousands of dollars in future earnings. So educating yourself and watching this stuff. Do I want to read a Twitter headline right now? Or do I want to learn what's really happening here? How, the market broke and the pricing mechanism broke in certain stocks. It makes me I'll never short a stock under $5. I always say I won't do it. This is a big reminder not to do that. Don't stay short stocks under $5. Like Nick Shaheen says, when your options in your favor and you sit around for the last 10 cents and you've written calls, cover it in and move on, because this crap happens and could take all your gains away. So, don't sit around for the last 10% of your gain. Lock it in, because you know what? Stuff happens like this. And this is new. It's so educational and so fascinating to watch. You're not going to read this in a textbook. You will maybe in 2 years, but you're not going to read it, from, any of your CFA curriculum. You're not going to read this anywhere. This is all new. This is priceless information they're giving you right now, and they're giving it to you for free.
Andrew Ross Sorkin just made the same observation that we've made on our show a number of times. Look at AMCX this morning, right? Different company, different ticker, moving.
Short squeezed.
Yeah, moving.
It's got a huge short interest. You can go, so if you want to see, just fun exercise, we'll stay on with you for another minute. There's like a high short interest. You probably know the site, Spencer.
I do. It's highshortinterest.com. It's been
highshortinterest.com. Let's go check it out.
Down.
Oh, it's down.
Well, no, it's up now. It's up now, but it's been intermittently down in the last couple of days.
Because there's so many people going to. I mean, you go to FinViz, you can go to the scanners, you can get this. But, okay, so here's the stocks on the list. I'm up on it now. The number one, at 138%, it says is GameStop. Well, we know that one. Space. Not giving Space a lot of love. Why do you think Space has been flying? Oh, because Kathy Wood might buy it? No, it's got an 81% short interest. So, it hit $48 or $49 this morning. I'm long Space, full disclosure. I'm long because I think the story's there. I'm getting lucky that I'm participating in a short squeeze. I almost feel like selling and trying to rebuy it, but we know I never rebuy, so I'm just trying to ignore it. AMC, there's your short squeeze. Holy mackerel, it's $18 right now. It's unbelievable. Bed Bath & Beyond, these are the top four. Bed Bath & Beyond, every single stock is up on this list. LGND, which is Ligand. We haven't given any love. Ligand Pharmaceuticals, up 11% this morning. Why do you think it's up? Short squeeze. This is every stock. Fizz, number 5 on the list, or number 6 on the list. It's up 3 points, so it looks like a laggard, because it's only up 3 points.
FinViz.
Fubo.
No,
Fubo. This one's brought to you by highshortinterest.com. Fubo is up again. Fubo. Why is Fubo going? The story got hot all of a sudden? No, it's got a 62% short interest according to highshortinterest.com. SunPower. I'm long SunPower. It's down. It's been running though. So, and it's been going and going. I sold some of it yesterday because I was like, this is just getting silly. So I finally sold half my SunPower yesterday. I bought it $8, so I sold half yesterday and locked half of it in. SKT, Tanger Outlets, I'm long that one on the short squeeze, so I've got to disclose that. I bought that one back. I played a couple times. I've been in and out of it, but I'm on long it right now, so I got to disclose it. AXDX, that's up 18%. So every single one. Tootsie Roll. Let me see that Tootsie Roll. Remember that song? Anyways, it's rolling here this morning. It's up 13%. So this is Tootsie Roll. Look at the chart on TR, Joel. Look at TR.
You know what? I got I'm going to let you guys finish up.
Tootsie Roll Pop.
That's no part of it.
Tootsie Roll Pops right there. Look at this. It just got back 3 years lost. This is stock that doesn't move. It doesn't even go anywhere. You just squeeze the living daylights out of everyone. Why are they short Tootsie Roll? Why is there 45%? Who's short in Tootsie Roll? Who doesn't like candy? That's un-American in itself. Joel laughed.
Joel's gone.
To the left. I don't know. If you want me to stop, I can stop, but I'm just going through. Go-Go.
Go-Go.
Well, Go-Go's been going. We know that. That's your online air internet, isn't it? Airline internet?
Yep.
Doesn't matter the fundamentals.
No. They got out of that business.
Oh, they do something else?
No. They got out of
blockchain?
They got out of the commercial. Now they just do like private aviation. They got out of the commercial part.
Okay. Well, anyways, that's getting squeezed too. So that's got 44% interest. Clovis Oncology, CLV. Every single one is up. CLVS, that's a pattern for me. Okay, there's one on track. OTRK is down.
You know what makes me angry is I've been looking at this list for I don't know, maybe 2 weeks.
I know.
I didn't buy anything.
Should have bought them all.
I didn't buy anything.
I didn't really either.
I bought BlackBerry. That's what I got. Horrible.
I bought BlackBerry too. I actually rebought my BlackBerry yesterday.
All right.
So I sold it and I couldn't take it anymore. I watched GameStop start going higher. I was like, I got to rebuy the BlackBerry. So I'm back in BlackBerry. I bought it at 1840 I think, yesterday. It's up 10%.
Silliness.
It feels like a loser because it's only up 10%.
Silliness.
iRobot's on the list. We know what iRobot's done. The explosion from $100 to $154 the other day. I mean, Dillard's. Somebody's saying Dillard's the next one. Dillard's already went. Dillard's 70. It's $105. This is Dillard's. It's went too. Right. It's incredible.
This data gets updated twice a month. When is the next short interest deadline for FINRA? Let's see. Settlement date, January 29th. It's due February 2nd. So we'll get some updated short interest data from FINRA next week. But yeah, just wild stuff. All right, everyone.
I don't see, I don't know how this story ends. Again, I'm just going to, close the show with nobody knows how the story ends. We anticipate that it's going to end in tears for everybody who's buying these things up here. But right now it's been ending in cheers because their stocks continue to fly. GameStop, $245 here this morning. There are some people that are making their lives on this stock, which is unbelievable. I've never seen anything like this in my life. Money again, just saying, what we were saying before, money coming from hedge funds that were short these stocks, that were teetering on bankruptcy, going directly into retail accounts. Incredible. The dumb money wins. And maybe we should end the show there.
It's all because
the dumb money has won in this case.
It's all because the guy wrote commissions. Maybe not. Maybe I'm making that up. But crazy stuff.
Just remember, if you hold on long enough, though, these gains can go away. It doesn't have to go to 1,000. I'm not saying GameStop can't go to 1,000. Can go anywhere. The pricing mechanism is broken. It could do anything. I just watched it go from 20 to 248. I would have said, if you asked me that last week, I would have said impossible. Now I will say anything is possible.
That's it. All right, everyone, that's going to be a wrap for us. Smash that like button. Hit subscribe. It takes 2 seconds. You'll get notified whenever we go live on YouTube. We would appreciate that. Thanks to our guest today, William Studebaker. Thanks to all of you in our chat. You can catch a replay of this show on every major podcast platform. If you're listening on our podcast and you can't see what's on the screen, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone have a good rest of your day. Good luck in your trades. Good luck in your shorts, your longs, whatever. We'll talk to you later.